Greetings, everyone. My name is Elsbeth McSorley, and I am the marketing manager here at Mega International. I want to welcome you all to today's live webinar, Financial Services Enterprise Architecture, Discovering the Cutting Edge Trends that are Maximizing Impact. We have two great speakers today that will be presenting to you. The first one we have Gordon Cooper. He is our services director for services and customer success. So we're super excited to have him with us today. And we also have Matt Rowell, who is the engagement manager. And if you know Mega, both these guys should look familiar to you. If you are new to Mega, I'd like to introduce you to Gordon and Matt. They will be your presenters. Before we get into the webinar, I just want to do just some quick housekeeping first. If you have any questions throughout the presentation, please feel free to put them in the questions bar in the GoToWebinar side panel there that you see. We will answer all the questions at the end of the presentation, but feel free to ask them as we go along. And I guess after that, the only thing I want to just review quickly is the agenda. We're going to cover digital disruption and its implications. We'll look at key challenges the financial institutions are facing today. We will dive into enterprise architecture applied to financial services, and we've got two real-world case studies to review with you today. So lots of good stuff. And without further ado, I'd like to pass the presentation on over to Gordon.
Thank you, Elsbeth, and good afternoon to everybody. So let me get started first with the first item on the agenda, which was digital disruption and its implications. So basically what we're looking at nowadays is the global trends in financial services, and this is exhibited through the digital disruption that is experienced not just in financial services, but across all industries. It is more obvious in financial services, and because of this, the technology that's being used or being evaluated is actually key to profitability, competitive advantage, and customer experience. So basically, customer experience is one of the key drivers for the adoption of technology, which is causing this disruption. Some of these technologies are actually shown on the left-hand side of the screen, and most of these would be familiar to all of you. So there would be everything from mobile payment and transfers, blockchain, cryptocurrencies, AI and robotics, big data and analytics, open APIs, cybersecurity, peer-to-peer lending, RegTech. So some examples of this are in the US, insurance companies are using AI to speed up claims processing and reducing fraud. Whereas in Asia, we have seen banks that are leveraging big data and biometrics and artificial intelligence to make banking simple and seamless for its customers. We've seen in Europe that banks are opening to APIs and introducing many innovative payment solutions to improve customer journey. And then also in Australia, in the Asia Pac area, we're seeing that insurance companies are capturing real-time data and using analytics to improve customer experience. So basically what we're seeing is that technologies are shaping the financial services sector. Now, if you look at this diagram, what you're really seeing is a squeeze from the top and the bottom. From the top, you're seeing that digital disruptions, they're shaping the way financial services evolve. In other words, competition is driving a lot of this. So you have an original disruptor in the market that may introduce something like the mobile capability to process claims. Then at the bottom, you've got squeezing up enterprise risk and regulatory compliance. So whether it's FFIEC or whether it's SR 11.7 or whatever the regulations may be, these things are putting the squeeze on the need and the need to digitally disrupt the market. On the sides, you've got business and technology innovation. So you have emerging technologies that are coming out, and the speed to market right now is amazing. It's faster than it's ever been. But what really is driving this is the power shift to the customers. Now, in previous discussions we've had with agile architecture, we see that the shift to consumers or customers combined with the shift from project to product is what's driving agile architecture. The same thing is happening right now to the financial services in general, in that consumers are driving the market, and in doing so, are utilizing emerging technologies and innovation to do so. Now, the result is you need to innovate in order to improve the customer experience, whether it's through mobility or whether it's through AI, so things are assisted, so the customer gets more out of the experience. Another thing is to improve the target state operating model. So basically, what you can do to improve how you deliver that consumable to your customers. And then finally, the need to enhance security and compliance with all things, but especially digital disruption. Security and compliance, if you start taking things into account like CCPA or GDPR, as well as the increased cyber threat because everything is surfaced on the internet, the need for security is always present and is behind some of this, some of the need to control the digital disruption. So basically, what we want to find out is what are some of the key challenges for financial services where enterprise architecture can actually help. Now, this is not a complete list by any means. So one of the things that we'll be talking about here is how technology management is an ongoing challenge. Most of these things will be very familiar to you all on a call. So basically, current IT portfolios become extremely complex to manage because of acquisitions, legacy systems, or organic growth. I think any company that has been through any type of merger or acquisition or divestiture understands this, is painfully aware of this, because you inherit these huge portfolios of technology. So you have to be sure that these technologies are properly integrated or they're properly evaluated or rationalized, because otherwise your portfolio just continues to grow and grow and grow, and these things have to be managed. So yes, this is a very big challenge today. Another is the lack of understanding on how applications serve the business. So basically what we're saying is that applications serve the business, enterprise architecture serves the business. What we're driving toward is business outcomes. We need to know the criticality of the applications, which ones can be rationalized out, which ones are unnecessary, which ones can you retire, and the maintenance cost that goes with them. But most of all, you need to make sure that the applications serve your customers or provide business value. Another is IT departments cannot easily integrate new projects into current IT systems. Anyone who's done architecture is familiar with this, because basically you start into an IT project and you need to create the architecture for the solution. How easily do these solutions integrate into the EA? How can you utilize existing technologies? Do you have technology debt that prohibits that? That leads to the next one, which is outdated technology components. And some of the consequences that we listed are cyber attacks. But so if you're using outdated technologies or technologies that are no longer supported, you run a constant risk of having vulnerabilities exposed. And these vulnerabilities lead to cyber attacks, and these cyber attacks lead to breaches. Breaches lead to huge expenditures. So these are some of the challenges for technology management, not just exclusive to the financial sector, but are very painful to the financial sector, because what's at stake? You actually control information that people put their lives, their life and information in your systems. Basically, one of the last things that I'll say here is one of the problems that we had when I was in the financial services industry. We had a mentality that if it's shiny, we buy it. What that means is, and I think everyone can relate, is that we own probably 5 of everything. So if there's 5 collaboration tools, there's 5 API management tools. We had multiple ERPs. There were many different technologies that a lot serve the same purpose. So the understanding of what your technology portfolio looks like, how it rationalizes, what the debt is, what your support lifecycle is, all of these things need to be looked at and managed ongoing in order to stay in tune with technology disruption. The next thing is financial institutions are still burdened with legacy infrastructure. So this goes back to a technology debt or using deprecated technologies. In financial services, CIOs feel that the biggest hurdle that they have is responding to digital disruption is the integration with complex existing systems and architecture. So in other words, if you were to bring in a new technology or solution, is it going to be able to integrate with existing solutions or existing infrastructure that you currently have? We see this across the board, not just in financial services, but again, it's very obvious with financial services, because if in fact you have a huge, like a big claims processing software, and you decide that you're going to bring in some new ways of analyzing pricing models, and you want to map these to your claims to understand what your KPIs are, then you need to be able to integrate these systems. If these systems are not able to integrate, all you've really done is build a more complex system than you can manage. So again, it is a challenge for any institution. Business and risk management, again, is a huge challenge. One of the things that you have to consider here is digital transformation fails when there is a lack of visibility in the organization. Processes are fragmented and there's no clear vision for customer journey. You have multiple silos that exist throughout your company. And then the digital risks intensify as managing risk and compliance internally becomes more challenging. So to break each one of these down just a little bit, let's first talk about transformation. As we all know, there's three basic types of transformation. The first is being able to do something that you're currently doing, just do it faster, better, and cheaper. The second is to be able to do what you're doing, but do it differently. And then finally, the third way is to transform by doing something new. So that is transformation. In order to actually digitally transform a company, if you do not have the visibility into the organization and how all of these components are interconnected, you really have trouble transforming. The projects will go on forever. You run into hurdles, cost overruns, delays, because you run into unexpected compatibility issues. So without or even what the impact on the rest of the company is. That goes into the processes are fragmented and there's no clear vision. If you do not have visibility into end-to-end process or what the supporting infrastructure for these processes might be, you cannot really see what the customer sees as they experience purchasing or consuming your deliverables. So basically, if you don't have an end-to-end picture of your processes, you really don't know what the customer experience or the customer journey is. Multiple silos does not just mean the difference between the business line and IT, or IT and HR. I've actually seen silos exist within business lines. Even though you sell a product, which for instance might be insurance, you have different types of insurance. And the different types of insurance are in silos and they develop their own solutions. In developing their own solutions, they may have concurrent capabilities, they may have concurrent services, shared services opportunities that are not identified. So your costs go up because these silos are not collaborating. And then for digital risk, we all know that risk and compliance with GDPR and CCPA, that's just one example. Security is completely is another example of this, of how digital risk can go up. Again, operational areas that are impacted by transformation, such as risk and compliance, product development, customer service, and then the operating models, are the most impacted by transformation. So again, I'll go back to the three different types of transformation. If in fact what your transformation model is that you're going to do something faster, better, and cheaper, basically you need to understand how you deliver these things, what the impact of changes are, and then see how your operating areas are going to transform. Another thing is, if with risk and compliance, what are the risks that you're exposing by changing your operating model? 1 in 3 of the G7 countries foresee transformation impacting their overall operating model. And they're saying that this impact is happening now. So as the industry transforms, countries in general, the insurance industry, the financial services industry, they're being severely impacted because they have to take these things into account. Otherwise, they run a risk of failure. And failure can be defined in a lot of different ways, whether it's costing money, cost overruns, or whether it's the target operating model failure. So then what we want to spend a couple of minutes on is enterprise architecture applied to financial services. So enterprise architecture is a key enabler of digital transformation. I really want to preach and cannot emphasize enough the holistic approach to enterprise architecture. For too long, enterprise architecture has been focused on the IT function, mainly because IT is where enterprise architecture was spawned. It was always seen with the lens of technology architecture, application architecture, when in fact, it is so much more than that. It is the entire enterprise. So if you take into account your corporate strategy, and with the advent of business architecture where this is accounted for, corporate strategy has to map to everything that's going on in the company. Same thing with business process. If you do not have an understanding of your business processes, and for instance, if you're segregating your business processes by criticality and you're looking at what your RPOs and RTOs are, if you have not married your business process to all the supporting infrastructure and the applications and technologies, then you really don't know if you're sharing RTOs and RPOs with the actual supporting infrastructure. Many times we've seen in these analyses where a business process could be set to critical, but the supporting infrastructure is set at lower than critical. So your RTO may be 4 hours for the process, but for the infrastructure that supports it, it could be a day. So it is only as critical as everything that's connected to it. So that is one of a really good example of why enterprise architecture is important. Customer journey cannot be overstated because digital transformation is driven by the customer. If we don't have a clear picture of how the customer progresses through our processes and how they purchase and use our products, then we really don't know how we can improve their experience. And it's very simple nowadays for companies to innovate and bring in new customer experience to make it easier through collaboration or through mobility, whatever the case may be. That is who will win the customer, whoever has the easiest customer experience. Information and communication, if we don't know how information flows through our company, how it flows through processes, how it's processed by applications, we really don't know how the lifeblood of our company circulates, because that's really what data is. It is one of the most critical assets a company has, especially in financial services. Applications and technologies, these things support everything else in the company. The common thought now is every company is an IT company. Well, there is no longer a distinction between the company and IT. Now it is just the company as enabled by technology, because without the technology, you could not perform the processes. You could not deliver the capabilities that you currently have. Compliance, I will lump risk and compliance into one category. And these are a new dimension that is just now being added into enterprise architecture. At Mega, we call it integrated risk management, because we're integrating risk and compliance into the enterprise architecture so that we have risks assigned at every component and aggregate these components into aggregate risk scores for solutions or for systems, for strategies, for initiatives. And then we can look at the compliance to see which of these components, solutions, capabilities, any of the other aspects of the enterprise, how they're governed by particular regulatory compliance needs. Finally, how can EA help financial services transform? We've broken this into 3 different pieces. This is facilitate transformation, adopt customer centricity, and then strengthen governance. So basically, under transformation, you need to ask how you can identify new risk, build controls to mitigate these risks, and then assess the compliance while transforming your business. You cannot do this without enterprise architecture. Enterprise architecture is the connectivity. It's the structure, the design. It is your company broken down into systems, into components, into building blocks, and then reassembled in such a way that anyone with a perspective or a viewpoint can take these viewpoints and understand how to make better decisions, which include transformative decisions, because they have the full picture. They understand the risks associated. They know what controls need to put in place, and then you can look at the compliance as well. Adopt customer centricity. You want to find out how you can better align technology and processes to enhance customer experience. Again, enterprise architecture is the key to this, because as customers purchase or attempt to purchase or evaluate your product or interact with your company, if you don't have clear visibility into the steps they have to go through in order to do this, what processes they have to perform, then you really don't know what the customer is seeing unless you do customer satisfaction surveys, which by that time it's too late. Finally, strengthen governance. How can you be more agile in order to keep up with the change, the speed of change that fosters business innovation? That in itself is a complete different topic, and we just finished a discussion. In fact, we have another one scheduled for the open group that discusses agile architecture and how you can do that through enterprise architecture. So now I'm going to turn this over to Matt. Matt is going to cover a couple of case studies that we've experienced here at Mega. So Matt, I'll turn it over to you now.
Okay, thank you, Gordon. So again, my name is Matt Rowell, and what I want to talk to you today is about two specific use cases in the financial industry and how they have implemented their EA practice, some of the challenges that they faced, as well as some of the results that they were able to achieve with that enhanced EA practice. The first organization, it's a $1.4 trillion global banking company with significant operations in the Americas. One of the challenges they faced was that it was difficult to manage or even understand all the applications and the technologies that were deployed across their 5 distinct business units. There were a number of redundant applications, a number of redundant systems, and there were a number of systems that were just not being utilized or being used by the organization as a whole. So Mega, utilizing the HOPEX solution, provided the ability to better understand how these systems were being used, who was using them across these different business units, what capabilities the system supported, and ultimately help rationalize the redundant systems in their portfolio, where they also may be able to consolidate savings by bundling the different systems across these 5 distinct business units. As part of the inventory of their IT systems, the organization was also able to define the key stakeholders for the application, as well as who was responsible for supporting them. By defining the different technologies that supported these applications, it also allowed the organization to define the applications that were using outdated or non-standard technologies, which helped reduce the risk within the IT system, reduce the vulnerability that the systems may have, better comply with both internal policies as well as external regulations that, as we know, is significant within the financial industry. By defining the responsibility for the systems through crowdsourcing, it also allowed the organization to better realize their shadow IT systems and also help put in place processes to help keep their data fresh and accurate. As the slide indicates here, in the first year of utilizing the HOPEX solution, the organization was able to save $5 million by eliminating redundant systems within their organization. The second use case that I want to talk to you today about is about Fannie Mae, that you're all familiar with. Similar to the first organization I discussed, they wanted to gain a better understanding of their applications and their systems, specifically related to their interdependencies of their applications, how the systems communicated with one another, as well as what data was being sent in the sensitivity of that data. By additionally defining the processes in the organization as a whole, it allowed the organization to see who was consuming the data and where there was risky data that was being provided to non-critical systems as well as processes. By defining a holistic view of the organization, it also allowed Fannie Mae the ability to see how these applications better serve the business, as well as the systems that did not significantly serve the organization. And ultimately allowed them to significantly reduce the cost of their IT systems. And ultimately, when we talk about cost reduction, we're talking about not just reducing the cost, it's looking at how we might be able to better utilize the IT funding to enhance the IT practice of the organization as a whole. By having that organization process information and all of the systems defined, it also allows for enhanced analysis, faster analysis, and ultimately that allowed Fannie Mae to do a more detailed impact analysis of what would be impacted by removing certain systems, by enhancing other systems, what areas of the business might be impacted significantly, or were there any critical systems that could potentially put the organization at a risk. As part of defining all of these different elements within their EA program, it allowed the IT organization to move from a push mode where they would just provide information to the organization, where they were now looked at as a trusted advisor, and business would come to this organization, to the IT organization, EA organization, to request data because they knew that it was very easy, the analysis was readily available, and allowed the business management leadership to make quicker, faster decisions on their EA organizational infrastructure. So those are two specific use cases, two specific organizations that benefited from an enhanced EA practice. I will now turn this back over to Gordon, but I'm also available for some more detailed questions as we get to the end of the webinar today.
Thank you, Matt. And so what I'd like to do is actually cover just a few key takeaways before we open it up for questions. So just to name a few, EA is a key enabler in financial services because it helps understand which business units are using applications and systems and how they interact to provide insight on future state design and impact. They also switch from reactionary to proactive using pragmatic EA to create business outcome-driven reports that enable senior management to make more informed and better choices. Also, they use insights from to connect and work with risk, regulatory, and compliance groups to help ensure the output is accurate, and then make it easier for you to use an EA tool that creates a central source of truth. None of these things are really surprising to you. But what I want you to take away from this, as far as the financial services vertical goes with enterprise architecture, is because you are able to connect all of the dots in financial services and to understand the impact of the decisions that are made and provide this before decisions are actually being implemented, the value that you present to the rest of the company, to the enterprise, to the industry at large is invaluable. Just a couple of examples. Whether what you're doing is contextualization of your models, your risk models, or whether it's understanding business continuity through a comprehensive picture of impact, the interconnectivity, the actual thing that EA is known for, understanding the building blocks, how they're connected, all the meta attributes that are connected to each of these components can be used to help people make decisions. The key is to be able to give these people the information that they need to make the decisions. So by slicing and dicing the enterprise in such a way that they have an understanding from their perspective, you can actually go through process models, for instance, and find out what key decisions are being made through the processes, and then make sure that you are able to provide that information to the stakeholders that are making the decisions. And it's simply not just a one-dimensional set of information at that point. You're giving them visibility into the entire enterprise. So I want you to, if you don't take anything else away from this, by taking every dimension of the company and incorporating into the EA, you are enabling digital transformation in the financial services industry. So that being said, I do want to open the floor up for questions. Elsbeth, I'm not sure, is the questions, do they come in over the WebEx or are they opened up?
Hi, Gordon. Hi, Matt. So again, if you have questions, submit them just in the question section of the Go to Webinar toolbar. I'll give people a couple of seconds to put things in. So just while people are thinking, if you have questions, let me just first, let me thank everyone for coming today. I know everyone's busy and your time is precious. So to all of our attendees, thank you so much for joining us. We hope that it was valuable and you enjoyed participating. And then I'd like to thank Gordon and Matt. Thank you to both of you for your time and sharing some nuggets and some knowledge with everyone. Since this had a lot of information, so if people need a little time to think about questions or nothing's coming at the moment, what I will be doing is within the next 24 hours, not just everyone who attended the webinar, but everybody who registered will receive a recording of this whole presentation, and I will send that out from my email. So if you've thought of some questions that didn't come to you right now, I'm going to send you the recording. Feel free to write back to me, and I will put you in touch with Matt and or Gordon. And yeah, so guys, we had no questions, which means that you did a great job. Everybody is satisfied. Thank you again, Gordon and Matt. And like I said, I'll be sending everyone the recording. And if you've got something you'd like to ask, feel free to email me back and we'll get you an answer. Okay. Thank you,
Yeah.
everyone. Have a wonderful rest of your day. Thanks, Matt. Thanks,
Yeah.
Gordon.
Thank you, everyone.
Thanks. Bye.